Last Friday saw trading volumes surge on the stock market, and that usually means one thing: the bulls are back, setting the stage for a massive run in June. That's why we've handpicked 3 ASX stocks that need to be on your radar, backed by Australia's government leading share trading, education and insights that are sought after by major media outlets Australia-wide. I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. Great to be back with you again.
Yep, all right, well, let's dive right in, mate. First is Elevra Lithium Ltd. Now on the screen is the chart of ELV. This one here, Pedro, and I'll get into in a second of what I was talking about earlier about some really strong volumes coming into the All Ords. I'll bring it up. But with this stock here, Elevra Ltd, it's in the lithium space. A few things to watch on the fundamental front. Its North American critical minerals theme is huge here. Canada and the US are increasingly trying to secure domestic battery supply chains along with rare earths and all that kind of stuff. And ELV is becoming strategically important within that ecosystem. And obviously the lithium price is something that needs to be watched, because this one is really in tune with the lithium price. I mean, I'll bring it up just quickly so you can have a look in terms of where that is. But lithium, in terms of a moving commodity price overlaid there in the green, you can see that it literally follows, or this stock follows the lithium. So it's such an important story. If we can continue to see the lithium price recover strongly into 2027, the earnings leverage could be substantial. But I want to bring up two things here. Obviously, right now we are seeing a lot of participation in this stock, and we're on the monthly chart here. And what I really like is that we've changed from being this really speculative type penny dreadful to some degree stock, the way it's been unfolding, to now having a lot more consistency in the price action, a lot more movement, ranges are wider. We're getting more opportunities on the board in terms of the depth. And so right now, these are the kinds of areas for stocks like this that become more safe to play. And right now, that's what makes this recovery a lot different to anything we've seen in the past. You can see in April 2015, just 1 month up, really, erratic price action. Again, this one did it. Strong, sharp moves up with nothing really. We saw a bit of stability back in January 21. You can see that the nature of the bars relative to all this period through here basically change around 2021, become more nuanced, more opens and closes at different prices. That all speaks to the liquidity increasing of a stock. And then we saw a really nice sustained run up to about $50. Now we're really seeing the same kind of price action and have been since June 2022. So that is good. We've based out higher twice. That's a fantastic sign for longer term trajectories. On the way up, I'd be mindful of $16 here, because it has been a level in the past that has held the stock. But if we're in an expansion phase on the back of a lithium recovery story, then don't be surprised for this one to get into the 40 region. And best case scenario, as you've seen throughout history, this could push into that $60, $70 region. But I'd say 40 for now. Watch 16 to 20 just as it's approaching for any short-term turbulence. But going back to the liquidity scenario, what I was mentioning earlier, take a look at what's happening with volume. Since September 25 on this most recent run, volume has drastically increased and is literally the highest it's been more recently on this last couple of week pullback. So I think, and zooming all that out, you can clearly see that the volume is on another leg higher compared to that previous run back in 2021. All these signs are bullish for me right now. And I think, just be mindful, obviously, if it does break momentum below that, not $8, then you can start to change your thinking. But for now, it's bullish, making higher highs. This one is looking very interesting. Your thoughts, mate?
Yeah, this one's looking great. We've already seen the likes of Pilbara and Liontown, already take off. This one has done around that 200% since that low back in June 2025. So you have to expect that, that trend is going to continue as it has during this long-term downtrend. And this is really what I always talk to students about is, identifying the trend first, because you want to be trading and investing using that momentum. And that's really what it's about. A lot of people try to pick these at the bottom or pick them as they're falling because it was cheap relative to that $50. It gets down to that $25 and you think, oh, wow, that's great. 25, it's 50% off. But you didn't know that stock actually had a lot more downturn to go. And it's now that it's really showing that sign of recovery. So this is where the smart money should be coming in. I mean, really, there was multiple entries around these points here and these points here that would have got you a little bit earlier, but this is a safe way to look at it because it was a little bit more high risk at the bottom. And like we always say, let all these people down here take the risk. And if you have to leave that 300% or whatever on the table, so be it. Because from this level onwards, you could still get another, say, 170, but it's a lot more safe than picking that at the bottom. It's actually now you're within trend. You've got a safer entry. I'd say anything about that above that $14 would be a good level to buy it as that continuation of the trend happens. And yeah, definitely, I wouldn't discount this one, at least going to around that $30 mark. So it could actually double in price in the mid to long term, but definitely the momentum is with it.
Yeah, and if you do want to start to get an introduction into the things we're talking about, if you are a person that does pick tops or look for tops and buy low, thinking that that is the strategy, have a read of this. This might change your mind, and in fact, it will change your mind in terms of how to do things right. The book is How to Beat the Managed Funds by 20%. It's free, just have to pay the shipping. It's from Dale Gillum. The link is in the video or the description of this video below. Check it out, but please, if you do want to take things to the next level and get a supersized version of what that book is, go and check out our Diploma of Share Trading and Investment. It is government accredited. You will not find another like it. It just speaks to the level of information in that course, setting you up for the journey of a professional trader. And please go and check out our testimonials. There are plenty on the website. New ones coming every day of what our students are achieving right now. But let's move on to our next stock, which is New Hope Corporation, Pedro. This one here, if we go to the chart and have a quick look, I'll let you take over because I know there was one comment last week about someone wanting to hear your voice a little bit more. I don't know if you've paid them $50 to put comments in so you can talk a bit more on this show, but we'll let you take care of this chart. Just some things to cover on, things to watch on this one is the coal price. Obviously is the biggest driver of earnings. If the thermal coal stays elevated due to Asian demand and energy security concerns, profits could remain stronger than expected. And obviously that project, they've got the New Auckland production. If the volumes rise as planned, that it could materially boost cash flow and valuations over the next few years. So watch that space from that lens, but mate, take away the fundamental, the technicals, because that's really going to tell us where things are at with this one.
Yeah, absolutely. I mean, you briefly mentioned the fundamentals. They're looking quite nice for New Hope as well. But on the technicals, we can see here that it has clearly crossed that downward momentum. And it is much like ELV that we covered earlier. It's in a new sustained uptrend. Now, this is great for learning this stock. And I'm going to expand out the monthly chart here because you've got a lot of data. You've got data back to 2004. And you've got data in an uptrend and you've got data in a downtrend. And you can see that the stock is very cyclical. So you can actually back test multiple strategies along this stock, and it will give you a better indication as to whether now is a good time to buy or not. Because really, you don't know whether you're still within this cycle here. Are we still in a long-term sustained, cyclical uptrend, or are we at the beginning of this new downtrend here? And really, to answer that, you have to go back and back test the stock and have a look at these overall larger patterns. And it's interesting, I actually covered this stock off. If there's any students listening, I did a deep dive on this for the students for our Trading Essentials report a few months back. So you may want to have a look at that because it has hit some very strong levels. Huge support here, that this move around that $3.60 level, even though you don't see it here on the chart, and we sometimes have a look at multiple support and resistance levels, and it has provided support back here, but it is a very strong level that it has bounced off, and I'm sure that students watching this know exactly which level I'm talking about. So the fact that it has jumped off that level, we've now got the momentum to the upside here. And we've got volume as well increasing on these up moves and decreasing as it goes down. That's a very key point here. So as price is going down, so is volume, which means that the buyers are not supporting this move down. Sorry, the sellers are not supporting the move down. So I actually do quite like this one. I like that it's broken that momentum there again. So it's looking like this was a bit of a buying the dip scenario here for New Hope. So all in all, if the coal prices continue to support this stock, I think it will be on a sustained uptrend. And NHE is involved with thermal coal, which is used for energy production and things like heating and all of that. So we are seeing the energy sector have that momentum behind it, and India being one of their major importers. And they are a developing nation. I think that NHC could benefit from that trend.
Yeah, awesome. All right, now let's get into our third stock, which is Pro Medicus. Now this one came out with some massive news today where they announced a new 7-year contract worth $16 million with US healthcare provider Tidal Health, which will use the company's full cloud-based imaging platform, including its cardiology solution. Now, this is good news for shareholders because it adds long-term recurring revenue, strengthens Pro Medicus's position in the US market, and shows customers are increasingly adopting more of its products rather than just a single solution. Plus, Pro Medicus has also renewed its contract with Allegheny Health Network for another 5 years, worth $28 million, while also expanding the relationship to include its workflow software. This is very positive news for the company because it shows the existing customers are not only staying with PME, but spending more, reinforcing the company's strong recurring revenue mode. Now, 2 big announcements in one day, that's huge, but let's go and check out the chart of PME. And I guess the most impressive thing for me, we've seen a lot of stocks right now. I mean, obviously out in the US, we're seeing new all-time highs. That's not happening on our market. But what we're seeing on our market is a lot of, I guess, resets of values and revaluations of a lot of stocks, healthcare sector. This one here right now has come off a serious correction from 300 all the way down. In fact, 330, it's corrected 68%. And it's literally bounced on this long-term momentum where often you find stocks that do go through this re-rate process. You can call it whatever you want fundamentally. We like to call it moving back to trend. And when stocks do that, oftentimes you don't need to know anything about the fundamentals, but you find some amazing opportunities when they settle down and move back to long-term trend. Now, it's happened throughout history with this stock, which is why it pays. If you're not thinking about getting educated on the technicals, you miss some of the best opportunities that stocks offer throughout history. And you can just see by following this all the way up how many good opportunities you would have gotten exactly on long-term resets to trend. And right now, we are seeing that moment potentially unfold. Some big news came out. PME is trading around this level through here. Now it's about 140, 158. So it's gapped up on the news. Buyers have picked it up. Again, trying to trade on the day of the news can be quite risky. I'd much rather prefer letting the market settle down. And I'll get your thoughts on that in a second, Pedro. But even with prices around here, we're still tracking under this momentum line, which is really now make or break for PME. If this news can get it going on that next leg higher, it's already reset back to trend. I think there's a really nice opportunity to at least 200 in the short to medium term. And if it can continue and get a bit of boost or a bit of a hype scenario going like it did back through this period in October 24, and we see the healthcare sector have a huge recovery, which is probably on the cards, we could see a really strong surge back up to that 280 level. But for now, 200 would be the marker, but we've got to get through this momentum. That said, we are seeing some, basis come in a little bit higher so far on this one. So it's a bit more high risk than the others. It's important to cover the news that happened today, which could be the catalyst to send it moving again. And, the volume has been pretty good coming in out of those lows. It's starting to settle down now. So I'd like to see it pick up again as we're breaking through this line. But for now, it's an interesting one to watch what happens through here, and perhaps, having some tight support under there as it's unfolding will give you a bit more confluence and confirmation to know that if we break this level through here on the way down, potentially it's not ready yet. But one to watch for sure. Pedro, your thoughts on this, mate?
Yeah, this is interesting. He's got two opposing trends right at the precipice right now. We've got the bounce off the uptrend, and then we've got that downtrend as well that's really providing that roof over it. So it needs to make a decision as to whether it's going to go up or down. Now, there are some clues as to which direction it's going to go at. And for me, this is a key fundamental principle of technical analysis. So listen closely. The opens and the closes of the bars tell you the whole story. And of course, I can't get into the whole thing. I can't teach, everything about it. But you need to pay attention to what the buyers and the sellers are doing around this period. Have a look at this bar. Open low, close high, open low, close high, open low, close high. That's telling me that buying has been supported around this area, also including some volume. Right now, volume has dropped off a little bit and we have trended sideways. So there's a bit of an indecision period happening at the moment. So for me, it's simple. If it breaks to maybe above that $150 mark, then that looks like we are continuing or reversing to the upside. If it breaks below, say around that $115, then it's going to continue much, much lower as we've seen this downtrend. So it's got that momentum of that downside. So I'd be a little bit careful, because oftentimes that momentum is just being pent up. It trades sideways and then just continues, like we've seen with CSL. It continues that downtrend. However, stocks do turn eventually, and this could be that point where PME is turning. So I'd be definitely keeping a close eye on this one. Do your back testing so you're ready, and just be ready to capitalize when it does.